Hello dear traders, my name is Tim and these are the main trading ideas for current trading session. First of all, let's discuss the situation with Euro USD. The Euro edged low against the dollar on Thursday after the release of European Central Bank minutes from last month's meeting that showed policymakers were worried that inflation could stay at high levels. The ECB raised rates by 75 basis points at the meeting, more than expected, as inflation spread to everything from services to durable goods. Policymakers concluded that a recession was becoming increasingly likely, but that risks were still skewed towards high inflation outcomes than predicted. While inflation keeps rising, economic growth continues to slow, and the currency bloc may already be in recession, as a surge in energy costs is holding back consumption and discouraging investment. Immediate support is seen at 0.9770. A break below could take the pair towards 0.97. Next, USD Canadian dollar. The Canadian dollar weakened against the US dollar on Thursday as the greenback strengthened despite the signal from the Bank of Canada Governor Tiff Macklem that the central bank would continue to hike interest rates aggressively. Macklem said the currency's recent weakness will offset some easing of inflation pressures that could come from improving global supply chains and lower commodity prices, and made clear the central bank will not yet be pivoting away from its current rapid pace of interest rate increases. Money markets raised bets on a 50 basis point hike at the Bank of Canada's next policy announcement in October. Immediate resistance can be seen at 1.38 and upside break and trigger rise towards 1.39. And finally, USD Japanese yen. The dollar strengthened against the Japanese yen on Thursday as investors bet on another strong US non-farm payrolls report that should keep the Federal Reserve on an aggressive tightening path for some time. US non-farm payrolls for September are due to be released today, with economists forecasting a headline print of 250,000 new jobs. Chicago Fed President Charles Evans on Thursday said that the Fed's policy rate is likely headed to 4.5% by the spring of 2023, as the Fed increases borrowing costs to bring down to high inflation. Strong resistance can be seen at 145 and upside break and trigger rise towards 145.60. So these are the main trading ideas for now. Thank you for your attention and don't forget to subscribe to our YouTube channel.